The US dollar is breaking out. The euro, the pound, and gold are all breaking down. The S&P 500 looks a little bit shaky, as does Bitcoin, so I will have all of the details in today's video. I'm sharing my exact trade plan in this video for all of those markets, so be sure to stick around. My name is Justin Bennett, full-time trader and founder of Daily Price Action. As always, all of this is my opinion only and not financial advice. So guys, I want to jump right into it here. I'm not wasting any time talking about the DXY on the 4-hour time frame. So if you've seen recent videos, this should be no surprise. I've been bullish on the US dollar, looking for the change of character above this 98.58 level. That was the last video I made. The market was trading down here at the time, and I was looking for that push above here. You can see where we closed above the top of this channel, right through here. Okay, so we got the hold above this, and then we had the change of character on the close above this high. Now, that was a change of character because this down here was a break of structure. We got the close below this low back here, making this the high to watch, 98.58. We did get the close above that, making this a change of character. So as of right now, the DXY, the US dollar index, is bullish. Now, this also comes, guys, as we've talked about this for over a month now. The daily time frame. Okay, so obviously back here in 2025, the US dollar was very bearish, lower highs and lower lows, a very aggressive move lower. However, over the past really year or so, we've seen this market go sideways. But not only that, we've seen these lows right here get taken out. Okay, so we had a BOS below these lows, making these up here the highs to watch, and we did get a close above here. So on this move up, okay, what you'll notice is that once we started to pull back, this right here, this area, was the imbalance right around 98. That was what I mentioned for really weeks as the area to watch for a mitigation of that imbalance and then potentially a higher low to develop. And right now you can kind of see where we are getting that, right? The market pulled back here, formed what could be a bull flag of sorts, and now we're getting the breakout. Now, here's the thing though, if you are bullish on the US dollar going into next week, early next week, I think that could be a mistake simply because if you look here at the 4-hour time frame, okay, we are getting the market pushing here into these highs. And furthermore too, and we talk about this in Discord a lot, which by the way, if you do want to join us in there, check out the link right here on the screen. Now, two things. One, that is going to give you a free SMC training where I hold nothing back. I show you exactly how I trade SMC full time. Also, beyond that link, you will have a chance to join us in Discord. So if you want to join us in there for my help with your trading, seeing my trades live, getting the full SMC course, and also the new trading journal that I just launched for members, free for life, then you will have a chance to do so. Okay, so looking here at the DXY again, we are pushing into these highs. That could be resistance going into next week, right around 99.2. So this area is going to be one to watch where we could get the US dollar pulling back. And furthermore too, if you look at the daily chart, you'll notice that on Thursday, we had this candle right here. We actually gapped up, okay, on Friday. And so far, this area down here is an imbalance. So you have these highs back here. You have this imbalance right around like 98.6, 98.7. This could be an area next week where if we were to get a pullback from these highs next week, this could be one area to watch for a potential US dollar long. Now, we also have an area back here too that is an imbalance. Like if you look here, let's just say for a second that if we were to get a pullback from the DXY from the low here up here to the high following the change of character, you can see where we do have this OTE, this optimal trade entry all the way down here. So there is an imbalance down here as well. So that is one scenario where we could actually see the US dollar pull back pretty significantly off of these highs, test this area down here, and then form that higher low. But as always, guys, there's no guarantee that we get that, okay? I mean, look no further than this back here, okay? So once we had this move up, we would have said, okay, well, we have this imbalance back here. We're going to come back here and mitigate this first. And as you can see, the market did eventually mitigate it, okay, but it went, significantly higher first. So just to be clear, there's no guarantee that early next week we do see the DXY pull back this low down here toward about 98 to 98.2. But there is that scenario following this change of character. But all in all, guys, the US dollar, in my opinion, looks like a buy. Okay, so I continue to like the idea of buying pullbacks here for the US dollar. And this goes as far, guys, too, as yields. Like we talked about this in Discord a lot. I don't mention it here on YouTube much, but we do talk about this stuff in Discord all the time. And what you'll notice here for like the US 30, right, the 30-year yield, is that we have this monthly change of character. This is a multi-decade trend, guys, where we're now getting a bullish change of character, and we are seeing now an ascending triangle form. Okay, so the market is pushing into those highs. This tends to be positively correlated with the US dollar. So the point here is that if we were to get yields pulling back early next week, okay, so you can see here on the daily, again, we're pushing here into these highs. So if yields were to kind of back off a little bit early next week, then that right there, back here into these highs, that right there could be a US dollar pullback as well. So just something to keep in mind, to keep an eye on along with the DXY chart. And you can also see this too, if we go to like a US 10 year. So the US 10 year is also, again, we talk about this in Discord a lot as well. But if you look at the weekly right here, same situation. We have this downtrend. We have a recent bullish change of character. And in my opinion, this is massively significant for yields and really across the entire market. But you can see here that we are getting a potential breakout from a trend line like this. So you can see this nice triangle pattern that has formed really over years for the US 10 year. And this breakout, even if we get a close above here, we could still see a pullback down here into these highs before potentially bouncing, okay? So the point here is that if yields pull back a little bit, then that could also equal the DXY, the US dollar, also pulling back some early next week, okay? But bottom line, like I said, I am not bearish on the US dollar, guys. I've been talking about this now for weeks, and we are starting to see this play out now, where in my opinion, this is starting to look like a bottom, okay? And this also comes to, don't forget too, I know I'm spending a lot of time on this, guys, but it's significant across the markets, not just for, one or two currency pairs. This affects everything. And like I've talked about too for a long time, if we go to the monthly, right? And I know that all these labels, I can hide these. I know that, guys. But even though you can't see this right here, guys, this is a multi-decade channel. And we have talked about this now for a very long time. Okay. So ever since the market came down here, like if I zoom in, this is a monthly time frame. If you look here, going all the way back to the first test, all the way back here in July of last year, we've talked about this. Okay. And the fact that every time we came down here, I said, if you're getting bearish on the US dollar down here, I think that's potentially a mistake because we are holding that 2011 channel support. And furthermore too, okay, so if you look at this here on the weekly, right, notice this pattern, right? Again, potential bottoming pattern here for the US dollar. Now, on top of that, if you look up here, we can see that this area up here, all the way up toward about 105, 106, this is a significant imbalance. We have imbalances through here, but especially this up here. This really catches my eye right around 106. So it's very, very early, right? Obviously calling something from 99.2, talking about 106 is a massive move for the US dollar. But if this does confirm, okay, if we do get a close above these highs on the high time frames over the coming weeks and months, then in my opinion, candles like this back here are fair game, okay? So just my opinion as always, but I've talked about this now for months. Hopefully this has all kept you guys on the right side of the markets. Okay, so let's move along here to the euro. And again, starting with the weekly, if we just want to go here, or really any time frame, it could be the 2 week, the monthly, you're gonna see this channel here. We've talked about this at length. What we've also talked about on this channel as well, on this YouTube channel, is that we have a bearish change of character. So this right here was the first time on this entire run up from the euro. Okay, and again, you can see where we have this kind of rounded top that is forming, okay? So I've discussed this now for weeks. Hopefully, again, this has kept you guys on the right side of the market. We had the BOS up here. That made this the low to watch. We had the close below, no question about it. That was over 50 pips below that low, guys. This wasn't even close. Okay, so that was a change of character, which meant that this entire move up, so from this high down here to the lows, it meant that this entire move up here was just mitigating this imbalance, okay? It was coming back here to give us that efficient auction that we lacked on this move down. And what you'll notice is this is our 50% line. We were in premium back here, even tapped into OTE. And you'll also notice too that this channel I've had on here now for weeks is also the one that has held up now over the past couple of weeks. So this up here, if you were looking for shorts, right here again, and if you look at the 1 hour time frame, we talked about this before, but all the way back here, this was that first retest of that level, and there's your change of character. Okay, we talked about it back here. It has been a slow grind lower. I mean, no question about that, right? If you were getting short back here in this area and you're still in this, obviously it's been a slow grind with the market going sideways a lot here. But the bottom line is that this change of character that happened on that first retest of the top of that channel, guys, is still in play. Okay, that is still valid. So for me right now, what we're looking at is this area down here. Let me get rid of this. And what we're looking at is this imbalance down here below the lows. So what I've said now for a while is that below these lows, we do have this imbalance back here, okay? So really all the way down here around 1.16, even below that, we do have this imbalance. So we could potentially see the euro come down here. And if we were to get a lower time frame change of character, then we could come back up here to mitigate imbalances like this now. Because notice how on this move lower, we now have imbalances that have formed on this drop, okay? So the bottom line here is that if we were to get a move down here toward this imbalance, okay, so let's call it right around like 115.60, 115.80 in this region down here, and then somewhere down here form a lower time frame change of character, we could run back and mitigate these imbalances and test these lows. Now, that does not mean it's bullish, because you have to consider that that would be in the context of what's happening on the daily time frame, okay? And what's happening here is that, again, we have this change of character. So any move up here, in my opinion, any relief here into imbalances like this are sells. Okay, I'm looking for low time frame change of characters to get short, bottom line. And that's just because, again, simply because the daily time frame, we have this change of character. We've now had the relief up here to mitigate this imbalance, all stuff we've talked about for weeks now. I'm not trying to sit here and say that I was right, but hopefully you guys have seen the videos. Hopefully you've paid attention and caught wind of the fact that this entire move up was just mitigating this back here. Okay. So I am still, bearish on the euro, as long as we have this down here. Okay. And look, if we were to come up here and take out these highs up here, then yeah, that would kind of change things, right? That would start to look a little bit more bullish for the euro. But as long as we're holding this, like I've talked about over the past few weeks, and we're carving these lower highs and lower lows, I am looking for a move down here into imbalances like this, okay? Right around like mid 115s or so. So that's what I'm looking for here from the euro. Okay, so basically looking for shorts on any kind of balance, any kind of relief we get next week, looking for those low time frame shifts to get short. All right, so the pound, guys, this is another one that has played out as expected, as anticipated. So you can see that back here, we had the BOS above this high. That meant this right here was the low to watch. We got the change of character, and now we're targeting this imbalance. So what I've said over the past few weeks is 1.33. In the last video I made, we were trading up here in this region, I believe right through here. I said 1.33 was still the area that I thought we would come back and visit. And you can see that we are very close to that now. So this imbalance back here is being mitigated, okay, right now. So like the euro, we have these imbalances now that have developed up here. So there is that chance that we come back here, mitigate this imbalance back here, right? And then possibly bounce from this region to come up here and mitigate this. However, at the same time, when you look at the euro and you have that change of character on the daily, you have the bullish change of character on the DXY, on the daily time frame, all of this, in my opinion, still points to looking for shorts. Okay, I'm still, bearish on this market, so I do think any relief here, is, in my opinion, a shortened opportunity. But you have to be careful and look for, first of all, the imbalances, right? Where are the imbalances? Where is the overall structure on things like the 4-hour, and then dropping to that 5 or 15-minute chart to look for that lower time frame shift. And I talk about this all of that in the free course, the SMC course that is in the description of this video. All right, so let's move on now to gold. Now, this one here, guys, stings a little bit. I mentioned this one in Discord, but I actually had a short on from this shift back here. So we had a shift. So we had a shift in the market back here. I was getting short. My stop loss was above this high. I thought I had it protected enough. I did get taken out by $4 on this high. But really, guys, honestly, I've taken like 3 trades over the past week or so, really week and a half. And this was a loss. Okay. However, I have a Bitcoin short on that's in profit. I have an S&P short on that is well in profit that I'll mention in this video. I'll talk you guys through that. So, in the end, guys, I put on 3 trades. 1 was a loss and 2 are open in profit right now. So, again, full transparency, guys, it does suck. I don't care how long you've traded. It does suck to get taken out by $4 only to watch the market run in your direction. So this is the move that I've been talking about now for weeks, right? It just unfortunately took a little bit longer through here, a lot of chop through here. And then we got this spike up that did, again, take me out of the position. But all in all, you can see where this descending channel is still in play. So I still think, just like the DXY, if we were to get a pullback on the US dollar early next week, possibly some relief here from gold, back up here toward these highs, looking for that low time frame shift to potentially get short again toward these lows. And ultimately, like I've said for a while now, 4,300 and below, you can see that back here, if we look at this bounce, this back here, especially on the 1-hour time frame, I won't show it because I've showed it so many times, but below these lows back here, this is an imbalance for gold. Okay. So when you look at this right here, combined with this descending channel and this momentum that we're now seeing from gold, okay, I do think that any relief here, if we get a low time frame shift, is a potential short to target lows like this and possibly the area around 4,300 down here toward the bottom of this channel. Okay, just my opinion as always, but I do think that that could be in the cards here for gold going into next week. But again, this is not a case where you want to be getting bearish on gold and short on gold early when you have imbalances like this up here. Okay, so we have all these lows back here, we have these imbalances. In my opinion, possibly some relief early next week, but any kind of low time frame shift here is a shorting opportunity in my opinion. Alternatively, if we were to close back within this range and then take out these highs up here, then that of course would be bullish. Okay, so let's move right along here, talk about the S&P 500. We have a lot to cover today, guys. I wanted to cover the S&P 500 and Bitcoin today, just because there is so much happening, especially with yields right now. I really think that that is potentially going to start weighing here on this rally. And this red line up here, just to be clear, we've talked about this in Discord, but one thing with a parabolic move like this in a market that's just hitting, all-time high after all-time high, is that it's very difficult to identify when a potential top is in. Now, we can use SMC, and I do, but we can also look at things like extensions. So off of this low down here, okay, so if I go back here into the template of this and come down here and just select the default, okay, what you'll notice is that this red line is the 1.68 extension, 618 extension of, this move right here from peak to trough. And so this was a level that I had on my radar, thinking that sellers, could potentially try to defend this area. Now, what you'll notice is that between Thursday and Friday, we did see the market actually move above this. And now what you're seeing as we go into that Friday close is that buyers are actually coming in trying to defend that level. So you can see right here that we got the market closing above, we got Thursday close above, Friday dipped below, okay, to fill in this imbalance back here, test these highs, and now we're getting a bounce. However, at the same time though, there are some cracks starting to form here, okay? And you can see the same thing on the crypto market, which we'll talk about next. But even something as simple as this right here, off of the lows, up here toward, some of these lows through here, you can see where we are getting a little bit of a close below. However, it is Friday, it is the S&P 500. This has been an intense rally. So, we'll have to wait and see, guys. This is just one of those cases where we'll have to wait and see. In terms of SMC though, what this is going to come down to is really this level back here, and then you've got this low. So in my opinion, as long as we are above this low right here, really there's no shift in the market in terms of the 4-hour time frame. So really you'd have to be looking at 73.50 to get a close below here to really confirm that change of character and a potential top, in which case we could be coming back here to test these highs all the way back here, okay? So all these highs back in this region, have not been tested yet. So if we were to get the close below here, right, get that change of character, in my opinion, these imbalances back here are fair game. Now, the short that I have on here, I'll show you why I did this, is first of all, I told myself that anything above that extension, okay, up here around like 74.53 would be fair game for a short if we got a lower time frame shift. And what you'll notice here is that if I go back toward this region, okay, so this was the shift that I saw. And the reason I took this trade is because this is the 1 minute time frame, guys. What you'll notice is that we went sideways here for quite some time. And then we had this explosive move up, okay? And when I saw this, I was thinking, okay, we're above that extension, right? We've now traveled a good bit. This is likely a trap. And as soon as I saw this right here, okay, we went sideways, we broke above. This was the BOS right here. This was the low, change of character. I was getting short, stop above the high. Now, why did I do this? Why would I short the S&P 500 with this kind of momentum? And it's very simple. First of all, again, like the reason I just mentioned, we were above that extension. We had this, what looked like an exhaustive move up. And so far it has been. And furthermore, my risk reward here is 26 to 1, okay? Or 1 to 26, I should say. So my risk is 1, my reward is 26. That means that my reward is 26 times my risk. And so that right there is incredible, right? And I'm going to take that every single time. So I shared this in Discord in real time, as I do with all of my trades. And so far it's well in profit. Okay. So what this is going to come down to, again, I think in terms of SMC is really, you've got levels like this back here. This is your BOS. This is the level down here to watch, right around like 73.50 or so. If we get a close below here, then you've got that confirmed change of character. Now, one thing that is going to weigh on this, obviously the US dollar. However, that really hasn't weighed on the S&P 500 too much. But the one thing to watch, guys, is going to be yields. if yields break out here, like that US 10-year, US 30-year, and really start to just rip higher, okay? In my opinion, that is going to really start to weigh on this rally from the S&P 500. I don't even think that this move, with how aggressive this has been, if yields start to really rip higher and go parabolic next week, that is absolutely going to weigh on the stock market. Okay, and if that weighs on the stock market, then that could spill over into the crypto market as well with things like BTC. So let's talk about this here. So let's go out here to a daily time frame. So what I talked about in my last video is that this price action over, I mean, really since February, this has been a long time of just consolidation here against this overall downtrend. It looks very similar to this. Now, obviously this consolidation has lasted longer now. Back here, I did think we were going to come off here, come back here, test this level and potentially break down from there. We did not do that. Now I do have a short position on that. Short position I took back here, by the way, I was able to get out for a profit, announce that in real time. This short I have on now though, is also still in profit. So I am short from a shift that we had back here, right? Stop loss above the highs. And my target here, okay, like I've talked about now for a while, and I'm sure some people think that I'm crazy, just being honest here, is mid 40s, okay? Now, there are a couple reasons for that I won't discuss in today's video. I will show you though that on, let's say, the weekly time frame. Okay, so one reason for that is that you can see that we have a fresh change of character. So this up here was our BOS. We had this low, we closed below the low. That means this is a fresh change of character. This move right here, this is very similar to what we saw in the euro. This move right here is doing nothing but mitigating this right here, okay? Fresh, bearish change of character on the weekly. Okay, so take that for what it's worth, guys. Then you look back here, okay, we had this consolidation after this displacement, and we never saw a retest down here. So if you look back here in early 2024, we do have imbalances back here on the BTC chart that, in my opinion, are going to be fair game. Okay, so this area back here. Furthermore, too, what's interesting here is that if you look at mid 44s, okay, there's actually reason here if you're a fan of measured moves, if this is going to be a bear flag here. So if we take a level off that high to the low, measure here from the recent high, notice where the objective comes in, okay? Right there around mid 44s. So again, my opinion is that if we get this push lower and we close below the bottom of this channel, take out these lows, then we are likely pushing down there toward mid 40s, okay? Now the alternative scenario would be really, I mean, Bitcoin would have to take out this high all the way up here. I mean, close to 100K at this point to really negate the bearish outlook here. Considering it's trading at 80K, guys, that's a long way to go to have to invalidate any kind of bearish scenario. But for me right now, from where I'm sitting looking at this, I do think that the push lower is coming, okay? And at least down here toward the lows. But like I said, I do think that mid 40s are coming just based on the overall trend, based on the fact that we do have that unmitigated imbalance from back here. Okay, so on this run up in early 2024, and again, you can see things like the measured move here from this high down here to the low, take that same distance from this high, you can see where it comes in right there around mid 40s. Okay, so I think that, you know, for BTC right now, we are likely to get that push lower. And really all this stuff comes back, in my opinion, to yields right now. I think that is really the market to watch because even though the stock market has been incredibly resilient with this happening, we're starting to get moves now from yields that we haven't seen in years. Okay. So this is definitely going to be the market to watch, the US 10-year, things like the 30-year. Keep a close eye on those markets. If you're not used to watching them, you should probably tune in because like I said, I think that if there's one thing that is going to really start to break these markets, including the stock market and the crypto, causing the stock market to really, you know, top out and the crypto market to put in another leg lower, it is going to be yields. So that's it for today's video. Keep it locked in here, subscribe to the channel, and also check out the video right here where I walk you through my SMC strategy. Have a great weekend, and I will talk to you again on Monday.